So I want to thank everybody for attending today. We're going to give you some real practical tips on how to reduce the amount of time you spend screening PEPS. So first, we're going to start with telling you a little bit about the current situation, the magnitude of the problem, and what we're seeing in the market. And then we're going to shift to some practical ways that you can kind of refine how you're screening PEPS today and save a lot of time long term. And then we'll turn it over to Andrew, and he'll give you some practical ways to work through the caseware platform, billing and an AML platform, an entire process there end to end, and give you some practical guidance there as well. So getting into this, PEPS are a growing problem, right? And so our agenda today, we're going to talk about that. We're going to talk about how you do more with less, and then how to get that PEPS screening more efficient, and then we'll have time for Q&A at the end. So PEPS are indeed a growing problem. If you look at WorldCheck, every politically exposed person we have has their own individual profile, right? So if you look, for instance, Hassan al-Tarki, he's on 40 different government lists, but he only shows up as one WorldCheck profile, so we kind of dedupe that. And that deduping is important because it saves you time. So if you look at the raw data, you know, we literally have over millions and millions of PEPs, but once you dedupe them, it dramatically reduces the amount of time that you have to spend reviewing those PEPs, so as much as 50%. And then, of course, you can add secondary identifiers in your searching, like date of birth and passports and age, etc. But even with all of that, it's a very, very daunting task to try to keep up with the initial screening of the politically exposed people and doing continual monitoring. And again, why it's so important specifically for financial institutions to screen for politically exposed people. On average, government officials make about 40% less than what you can make in the private industry, all right? And so because of that 40% delta, oftentimes government employees can find themselves trying to bridge that income gap, which makes them more susceptible to take bribes and being involved in corruption. And that's why politically exposed people are so important to watch, because they make a lot of important decisions. They get access to a lot of contracts and a lot of final decision points. And because on average they're underpaid versus what they can make in the private industry, you wrap all that in together and they're very, very high risk for your business. So again, even with deduping, even with adding some of your secondary identifiers, it's still a very difficult situation for your staff to keep up with screening politically exposed people. And so our politically exposed people in the WorldCheck database, they get categorized into a category, and you'll see here some individuals in our database could be in there for crime or narcotics or financial reasons. But you see here with the chart, a huge chunk of our database, in fact over half of it, is tied into people that are politically exposed. They're either holding an office or they're close associates or close relatives. So it drives a big percentage of our database today. So in fact, over half of our profiles, like I said, fall into the individual category. So these could be people that have been accused, investigated, arrested for some kind of WorldCheck-related crimes, financial, private corruption, etc. Maybe they've been convicted, maybe they're being investigated, etc. Then you've got individual people that have been appointed or elected to a political office, people that are on different kind of watch lists, such as OFAC, and then you've got those close associates, and you've got the relatives of PEPs, and that drives, again, over half of our database. So on average, if you look at your initial screening and then you move on to continual monitoring, almost 60% of the hits that you're going to get on average from continual monitoring efforts are going to be driven by politically exposed people, because again, you're searching off a name. Oftentimes names are similar, difficult to determine one from another without additional data points. You don't always have all the data points you want. So it drives a huge percentage of your continual monitoring hits. So if you're sitting there today thinking, what can I do going into 2017 to really make sure my staff is keeping up with workload, or if you're faced with maybe you're not getting all the headcount additions you want, or maybe you're going to be facing some headcount reductions, really focusing in on how you screen for PEPs and different data points that you're pulling in and breaking them into risk categories is going to be critical, because it's going to be one of the main drivers that you have to reduce the workload that your team faces on a day-to-day basis. So it's critical that you understand all the options that are going to be available to you. So when you look at the WorldCheck data in terms of our PEPs, we've recommended categories, and this is important to understand, because when you shift to how can I save time and get more efficient in my PEP screening, this is going to be really important to understand. So you see here, there are a lot of different kinds of organizations. There's, international organizations like the UN or International Monetary Fund, World Bank, et cetera. Then you kind of get down into regional organizations like NASA, for instance, would be one. You get into national governments, subnational governments, which would be kind of, a lot of your local and state fall into that. And then you got to get into some non-governmental, which could be, primary religious leaders, et cetera. And then your state-owned enterprises and your state investments. So there's a lot of different kinds of politically exposed entities and people out there. But then it's not only the PEPs themselves, they have relatives, so they've got spouses and children and extended family, and then they have close associates, for instance, like they're a legal advisor or they're a political advisor or they invest their money financially or they're a lobbyist for them or they're a key member on a company or an entity that they own. So there's this whole web of different types of politically exposed people, their relatives, and their close associates, and that's why we break this down, because this will be critical as you think about long-term, whether you use WorldCheck or use another data provider. There's all different kinds of codes and ways that you can be able to break down the data to help you get more efficient, so it's important that you understand all the different breakdowns there. And again, if you look at our database, over half of the database is politically exposed people, right? So that's why they drive such a big percentage of your continual monitoring hits and the number of hits you get on the initial screening. It may not all be elected officials or not, but when you add their associates and their relatives, it really falls into a big PEP bucket that drives a lot of your activity. And you can see here, if you kind of break down where our PEP's from, you've got kind of a quarter national, subnational, local, and then you've got all this army of relatives and close associates that drive a lot of your hits. So there's a lot of them out there. So if you look at this growing problem, so you may say, yep, I'm having a hard time now keeping up with PEPs. Maybe I screen them on the front side, but I'm not continually monitoring, or I'm trying to continually monitor them because I know I have to because of regulations, but I'm having a hard time keeping up. Well, the problem is only going to grow, right? So if you look at all the profiles added to WorldCheck dating back from 2001 to recently up into 2015, you can see the growth rate, right? So the number of records we're adding every year is somewhere between 350 to 500,000. And so you know that roughly half of those would be PEPs or PEPs affiliated. So suddenly now, every single year, you're another 175 to 350,000 new PEPs or relatives or associates are added to our database. That's going to drive even more and more hits for you on the front side. It's going to drive even more hits from a continual monitoring standpoint. So if you're struggling today or worried that you're struggling, start projecting those numbers out. 200 to 300,000 more PEPs every single year over the next 5 years, and suddenly it's another million and a half names that you're potentially screening against and getting hits for. This problem is literally growing every single day. So we're adding 900 to 1,400 profiles every single day. And again, on average, if half of those are PEPs or associates, another 450 to 700 every single day of the calendar year. Again, start projecting that out. So when you start thinking about the future, what can I do to operate with the current headcount I have in my compliance team, or what can I do if I'm going to be faced with maybe some headcount reductions? How am I going to make all this workflow work? Focusing in on how you screen for PEPs is one of the biggest things that you can do to give manpower hours back to your organization. So that's why we're talking today. That's why I want to give you practical examples, because again, this is a growing problem. The PEP population continues to explode. If you look, here's what drives the numbers, right? So on average, a politically exposed person has about 10 connections. Could be organizations, could be close advisors, could be relatives. So here, for instance, we have Jacob Zuma, a bit of a controversial president of South Africa, got in trouble in recent years for allegedly taking about $20 million of government funds and using it to upgrade his personal residence, which, to do a good remodel these days, you kind of need, $20 million on your house. You got to make sure the gold plating's right and the mahogany wood looks nice. So you need at least $20 million to pull that off. So Jacob's got quite a web here. So on average, if you look, most PEPs have at least 10. He's got people he's affiliated with, like Chabir Sheikh, and he was convicted, served 15 years for taking a bribe from a French arms company. So again, this is the typical kind of PEP profile, and this is why the numbers explode, because every single day we're making new linkages to politically exposed people. They take on a new advisor, or they buy into a new company, or they divest the company, et cetera. So those things are changing every single day, and they drive a lot of your hits. Same thing, Stephen Ames Freeman, right? So an attorney who was involved in setting up a number of shell companies that were allegedly funneling money from a drug cartel. So he was using it to launder dirty money. And again, you see this web of connections that he has that really, populate the database and drive a lot of your hits. So it's a growing problem. You need to know relatives, you need to know associates, but it's going to drive a lot of your hits. So you can compare that to, okay, I've got a PEP population that's growing every single day, but I live in a world, especially in the financial space, where I'm facing cost cutting, right? So 88% of the firms say they're going to do cost cutting in the next 2 years, and it's not all save to grow and reinvest in new strategy. A lot of it is because companies are getting stressed and they're trying to make their bottom line numbers. So there's a whole lot of cost cutting going on, especially if you look at a lot of the banks. There's a lot of doom and gloom out there that there could be some massive layoffs that continue to happen in the banking sector. So again, you've got a growing PEP problem. Potentially you have less resources to do it, because when you look at the financial services industry, so this chart goes back about 5 years. So the blue line is layoffs. The red line is new hiring. And what you see, there was a slight recovery in late 2014, but new hiring in financial services has been fairly low for about a 5-year window, and it doesn't seem like that number is ticking up in 2016. If anything, it's going down. So again, if you start projecting out, it doesn't seem like a lot of headcount is going to be available for most of you in the financial services industry. Even if you're a non-financial, there's not a ton of hiring going on. So if you've got more PEPs coming in, you've got the same or less resources, your only option is to get more efficient with how you screen your PEPs. Otherwise, you start having to make difficult decisions like, well, I'll screen on the front end, but I don't have the headcount to continually monitor these, and then suddenly you're vulnerable from a regulatory standpoint. So it's a very difficult situation. Higher demand, less resources to do it. Where does that leave us? And that's why we're here talking today. So how can my PEP screening get more efficient? That's why we're talking today. So in a perfect world, if you look at kind of how your team screens PEPs today, you would love it if they were spending the biggest chunk of their time on those PEPs that present the greatest risk to your organization, and then you work your way up the ladder to talk about more medium, and then spend the least amount of time on those PEPs that pose the least amount of risk to your organization. So your risk ranking, you're making your risk ladder, you're determining who presents the greatest risk to you, who presents the least risk. So in a perfect world, you'd love to be doing this, but unfortunately, most of the financial institutions that Andrew and I talk to, it looks more like this, because a huge portion of the PEP population tends to be lower risk. If you're treating those the same from an initial screening to an ongoing screening, then suddenly you can be spending the bulk of your time on your lowest risk PEPs, which is probably not where you want to get as an organization, because then potentially if you're spending less time on the higher risk, something can slip through that shouldn't. You could have a false negative that slips through, or on the onboarding side, you miss something from source media that you should have caught. So you want to be here, but unfortunately a lot of folks are here just because they're struggling to keep up because of resource, et cetera, issues. So we walked through this. Now let's talk about some practical advice. Okay, Jeff, you told me it's a growing problem. We all recognize headcount is difficult to get these days. How do I fix this? The reason I'm on this webinar is I want someone to be able to tell me, is there something else that people are doing that I'm not doing that can save me time? So let's get into that. So for a lot of you, you may have some PEP risk scoring model in place today. You haven't looked at it in a while. Maybe some of you have nothing in place, or you feel like it needs to be improved. A great place to start is if you've got your known PEPs, or if you just have a whole client database and you're not entirely sure who's PEPs, then you can start with, through us, or using Caseware services, or using your current data provider. Start with doing a PEP risk assessment. So you could look at things like geography and the type of category a PEP's in. Are they local? Are they national? Et cetera. What types of skits are you getting? And build a really practical, common sense PEP risk scoring metrics, because then that can drive you to, for all your existing clients, you can find out the ones that are PEP and then break them into high, medium, and low buckets. And if you can break them into high, medium, and low, it opens up a world of time-saving opportunities for you. So we're not going to tell you how to do it because every single risk appetite is different for every organization. But what we are going to do is start giving you some practical examples here of things that you could do to save time. So let's say you went through this exercise. You've done it in the past, or it's time to do it again, or maybe you've never done it, but you break your PEPS into high, mediums, and lows. You identify them, and you risk score them. What would that allow you to do? So, for instance, you could then start breaking them out into buckets, right? So you've got the ones that you know are low-risk PEPs, which are going to be the preponderance of your PEP population most likely. Then mainly for those, maybe you're looking for those for sanctions only, or you're looking for watch lists in just certain areas, or maybe in low-risk areas, Sweden, Denmark, Spain, etc. Maybe you're looking at the PEPs, but not so much their relatives and their associates. Because, again, the biggest percentage of your PEP population is probably going to risk rate pretty low, and so you want to minimize the amount of time that you invest in that population. And then as you climb the scale, your medium ones, you're widening the net a little bit. You're looking at sanctions and regulatory. Maybe you're looking at some associates and some relatives. And then finally, at the high level, you're opening up the throttle completely. So if I'm in China, India PEP, I want to know all their associates you got. I want to know all the relatives you got. I want that throttle to be wide open because I'm terrified there's something that we could miss. But again, when you start risk scoring, it allows you to treat all your PEPs differently because regulators want to know, do you have a process, do you follow it, and does it work? And so this kind of risk tiering can really help you be more efficient, where you say, I want to spend the bulk of my time on my highest risk, then my mediums, and then my lows. So I'm going to start changing a little bit what I look for in each one. I know that I've got equal access to information on all of them, but I don't know that I want to treat all of them exactly the same. For lows, I want to kind of constrain what I'm looking for. Mediums a little more, and PEPs on the high end of the ladder, I really want to open that up. So, because really you're trying to get more efficient so that you can tell your board, we spend the bulk of our time on high and medium risk. We've got a risk ladder. We've risk scored them. We know where our risk mainly lies, and that's where we spend the bulk of our time. Because then, if you can start minimizing the number of initial hits and continual monitoring hits that you get from your low-risk PEPs, given that they're going to be the majority of your PEP population, and PEPs drive 60% of your continual monitoring hits, and suddenly you start having some huge time savings. We're talking 30, 40, 50% of the number of hits you get today. You can start dropping those out of your system and get far more efficient. So that's the initial step, PEP plan. Let's say, you know what, I've got a PEP score, we've got something in place. I need some practical advice of, I've got that in place, but what are some other things that I can be doing to really help me minimize the number of hits I got? So I'm going to give you 5 or 6 basic tips here. This is all about using the data you have available, whether it's WorldCheck, whether it's another data provider, using the elements in that data to help you get more efficient. So for instance, geography is a huge driver. So we have our country check ratings for over 250 countries. We rate from very high risk to very low risk, right? So for instance, on your low risk countries, you're again, Sweden, Spain, United States, UK, etc., you could kind of minimize what you look at there. So do you really want to look at every single associate and every single relative for your low risk PEPs? Maybe, maybe not. Maybe you want to constrain that a little bit. And using geography as a driver of that can be really helpful. And then as you work your way up through the ladder, again, you get to the Chinas and the Indias and the Russias. Open that up quite a bit so that you're touching every single associate and every single relative that they have. Again, because you want to spend the majority of your time where your risk is the highest using geography. So whether you have an online database, whether you're using a data file through a platform, or you get data file just raw into one of your homegrown systems, really focusing in around geography and using country risk to determine maybe how you treat PEPs is a huge way to save time. Secondarily, using date of birth is a great way to eliminate false positives. So you can do it a couple different ways. So in our database, you've got an exact date of birth, or you've got multiple dates of birth, or even on some of them, we have what's called an age as of, where we've got multiple reports of dates of birth. We're not exactly 100% sure which one's right, so we give you an age range. But if you can build into your initial screening or into your continual monitoring that the name needs to be within a year or 2 or 3 years of the reported age date, from a continual monitoring and initial screening, that one small change can make a big difference for you in terms of the number of hits that you have to process. So again, this is data that you likely have access to today, whether it's WorldCheck or another data provider. It's about bringing it into your process so then you can get really more efficient and rule out those false positives of, this is the same name match, but this person's 16 years older in WorldCheck than it says on the application, so I know that's not the person. So by doing some settings, you can eliminate where you don't even see that hit in the first place, and that can be a huge way to drive down. So far you've got geography, you got date of birth. Let's talk about all of the sanctions and watch lists in the world, right? So let's say you've got a lot of applicants that are heavily domestic, and so you're looking at those on the front side. So maybe initial screening, you open it up more. But when you get into continual monitoring, so it's a domestic PEP or it's a PEP from a lower risk country, do you necessarily need to run them against the watch list in Zimbabwe or Japan or down in Latin America? So looking at all the lists that you run today up against your PEP population to decide, does it make sense if this is a lower or a medium risk PEP, does it make sense to run them up against 900 different watch lists, or there are some that maybe I could drop off because they don't seem super relevant, they're not in the geography that I'm typically tied to, the likelihood of getting a hit for that person. Because then what it does is starts letting you drop off a whole lot of names that could be same name hits, but in different geographies or tied to lists that you're not so much interested in. So looking at the list that you're screening against, again, once you kind of have high, mediums, and lows, and you really start scrutinizing mediums and lows, am I screening against the right list? Do I need all these lists? Is a huge way to save some time. Using native character screening, so especially when you get into your Asian countries and when they transliterate, they become very common names. Screening in the native characters is a fantastic way on the initial side, and from continual monitoring to dramatically reduce the number of hits that you get. Dropping low-quality aliases, so nicknames and false names, low-quality aliases that people like to use can be a great way to drop some hits that you get. So as you start thinking about how do I reduce the number of hits I'm going to get, low-quality aliases is definitely something to look at. Then we get into update fields, right? So every single day we're updating records. So whether with WorldCheck or another data provider, inside of Caseware, another platform, using the update field so that you can really start screening on, I want to know if something new has happened. So if it's, a passport change, if they're on a new watch list, if they've changed the name or added an alias, some things I care about, some things down in adverse media if it relates to this, or they just, changed one letter in their name. I don't so much care about that, but really starting to figure out what you care about, what kind of changes matter to you and what don't, and then start updating those in your screening methodology can help you dramatically. Yeah, something changed there, but it's in a low-risk kind of profile, so I don't so much care about getting a hit on that, because, again, you're looking at your lows, you're looking at your mediums, and you're scrutinizing everything. Should I be getting a hit on this low or medium risk PEP? Probably not. This change I really don't care about. Start doing some updating around the update field in your methodology, because, again, we're updating 1,800 to 3,000 profiles a day, so you run those out over the course of a year, and it's a whole lot, hundreds of thousands of records. So really starting to figure out what you care about in terms of, if this gets updated, I care about it for mediums and lows, and this kind of updating, I care about it for highs, and really starting to structure that way. And then, of course, using our keywords, right? So a lot of people say, I really care about PEPs specifically as they tie into the Panama Papers. So we've got keywords that you can screen just on the Panama Papers as it relates to PEPs. So again, whether our database or trying to find someone else's that got keywords, you're really trying to pick and choose the things that you care about. So as you go up the risk ladder, you screen for more. As you come down the risk ladder, you screen for less, because you can't treat everybody the same unless you've just got tons of headcount to work with and you can afford to treat everybody the same. You got to make choices on the mediums and lows about what you care about and what you don't care about, and that's when the time savings really, really happens. And again, we break our keywords into regulatory enforcement, law enforcement, sanctions, other bodies, et cetera. And we have over 600 to choose from, so it can help you really be efficient. Then finally, fine-tuning your kind of search algorithm on the front end and on the continual monitoring side between fuzzy and exacting. So typically on your initial screening, you want to be more fuzzy, make sure you don't miss something. Then once you've identified the third party and you've marked them for continual monitoring, you can kind of go more exacting, right? So that can be through a database or through a platform like Caseware, but typically, go a little fuzzy on the front end and then get more exacting on the continual monitoring side, because again, that's going to really drive down the number of hits you get. So you start with kind of PEPS scoring, start with a baseline of standing where you are, high, medium, and low. If you've done that, or you're in some process of that, or you don't want to do it, think through that, because there's a lot of time savings there. And then practically start thinking about using geography and using data first and using low-quality aliases and using native characters and looking at the sanctions list, because the whole point of this entire conversation is have a conversation with your vendor, talk to Caseware, talk to us, talk to your current provider and say, for my mediums and lows, what am I screening for today? Does that make sense? Is there anything I should be dropping off there that would start saving me some time? Because again, when you start thinking about 2017 initiatives, there's really few things you can do that'll give you the biggest bang for the buck is really looking at your methodology around PEP scoring, specifically your lows and mediums. You probably have access to the data that you need today. You just need to figure out how do I slice and dice it better and start dropping people into buckets so that I can start treating each one a little bit differently to really start saving some time long term. Because again, if you imagine, if you could save 50% a year in the amount of time you spend on initial screening and going into continual monitoring, what projects could your group take on? If I have to look at reductions cost-wise over the next year or two, can I pull it off without doing this? So it's a critical part of what you do, because you could double the amount of time you're going to spend on high-risk PEPs, and you can really make sure you're digging really well and spending the time you need so that you're not missing anything that slips through the door because you're mired in all the details of the mediums and lows, and maybe something at the high end slips in that it shouldn't. But again, given the odds, chances are most people on the phone don't have the resources they need. They're not going to get the extra resources they need, and they may actually have to do more with less in the future. And your pet population is growing, so this is one of the biggest things you can do long term to really drive some efficiency in your group. So now I'm going to turn it over to Andrew Simpson, Chief Operating Officer of Caseware, and what he's going to do is kind of walk you through what he's seeing in the market, how launching an AML program could work inside of a software program, and figure out all the details of that. So Andrew, I will now turn it over to you.
Okay, thank you, Jeff. So what Jeff went through was really excellent content, and a lot of it is some of the same processes that we adopted when we are trying to automate the whole screening process for PEPS. So what I'm going to do is quickly go through the automation options, because in addition to refining the methodology that you're using around PEP screening, there are other automation options that will get you some significant savings in terms of resources and how well you use those resources. So we're going to talk about that. We're also going to talk a little bit about real-time integration, and then using some of the same risk scoring approach that Jeff talked about. How do we get that into a broader conversation around risk scoring? We're going to talk about the workflow and case management approach, because that gives you some significant improvements in efficiencies as well. And then just how do you know how well things are going, how effective and how efficient things are. We talk about the visualizations and the dashboarding and reporting that you should be able to get from an implementation. So there are three things that I want to go through, but let's start with the first two. In terms of automation options, the periodic screening, screening all your customers, and then also talking about real-time transaction screening. So in terms of periodic screening, it's really about how do you automate that process to continuously look at all your customers. So someone is not on the sanctions list today, but then they turn up on the list 6 months from now. How do you catch that, and are you continuously screening for that? So one of the things that you should have is some ability to automate that. The other thing that you should be able to do is that you should be able to look at implementing this for real-time screening as well. Why do you need to do real-time screening? Well, there are certain type of transactions that you may be doing in your financial institution or whatever other institution you're involved in, where when those transactions happen, there's no way to take it back. So if it is, especially wire transfers would be an example of that. So what we do is that we inject our screening platform in the middle of the entire process. So the banking system, you want to initiate a wire transfer, we pull the transaction data, we do the matching process against WorldCheck. There's something else that we do here too, is that sometimes your regulators might give you lists that they want you to screen against, or you might have your own internal list. We aggregate all of that and expand the source that we're using for screening. And all of that just flows into your natural process. Then we apply the different matching algorithms, and if there is a hit, then you get the alert. The good thing with this is that all of this is happening without you having to have any real human intervention. The only time a human intervention is required is if we find that there is a potential match. And then what we would do with that is that we push it to the compliance person or whomever you want it to be pushed to in using workflow and case management, and they can make a decision. If they decide to reject the transaction, then that transaction is rejected. If they decide to accept it and go ahead, then that's documented in the system, and then we would handle all the interfaces, whether it's to your payment gateway and your banking system. We handle all of those communications, and so what you'll see is that that transaction will be handled. So if later on the regulator came in and said, hey, you got a hit on this PEP, why did you send through the wire transfer? You'd be able to go back and see the reasons and the history that was documented for that. But note importantly that the system that the customers are implementing, it is automatically trapping those transactions that are considered to be high risk. In terms of how you can now you can have the risk scoring methodology that Jeff talks about, and you should, in terms of how you go about screening for PEPS. But in addition to that, you can find that this should be part of a broader risk scoring methodology. So it should involve your transaction monitoring and the scoring around that, whether or not you're filing regulatory reports for this person, whether you're doing suspicious activity reports. Depending on your jurisdiction, it might be a STR as opposed to SAR. So, and also in your onboarding process. So some customers have also chosen to say, hey, I would like, when I'm onboarding this customer, I want this customer to be screened in the onboarding process. Not only to screen to say whether or not that person is a medium or a high-risk PEP, but is there anything else about this customer's onboarding data that would influence their scoring in a way that I need to reconsider what I'm doing with this customer? So that's another area that you should look at. When you think about the whole matter of how exactly are you going to handle this? When I get a hit on a particular PEP, how do I handle it? And I think that if you're having 20,000 customers and you're screening 20,000 customers, that's okay. When you get to 1 million, 2 million customers that you're screening all the time and you're doing tens of thousands of transactions, on a monthly basis, then the dynamic changes. And what you need is that you need to have a situation where you're engaging not just the compliance department, but you need to engage the business. So if you're a bank and you have 100 branches, if a transaction originated at the branch and there's an issue with it, you should be able to re-engage the persons at the branch that has the most understanding about what's going on about that transaction for them to make some sort of a decision. So when it comes to the compliance team, you don't just get that there is an alert around the transaction, but you get some additional information. How do you go about documenting false positives? That's very important because your case management and workflow technology should be learning all the time and adapt to what you're telling it. So if you have a solution that, hey, you said that Ashley Hunter is a high-risk PEP. You told me that last month, and hey, you're telling me again, what's going on here? And this is what I decided to do about it. Why don't you just re-perform and learn from what I did the last time? Your workflow and case management technology should be doing that. Another thing too is that when we talk about understanding root causes is not just for the sake of understanding what really went wrong, but as a compliance team, if you can get ahead of what is going wrong and the failures that you're having that is causing these exposures, if you can get ahead of that, then you're not just always chasing a compliance program, you're starting to get ahead of it, and that becomes a lot more efficient. So in terms of the tuning of the algorithm as well, that's another thing that we have to do from time to time. So just last week I was on the call with a customer, and they were talking about, you know, how strict the matching algorithm has to be for, say, real-time type transactions. And I said, yeah, when you're doing real-time screening, you have to really be very tight about it, because you don't want to have your operations coming to a halt. But if you're just doing a manual screening on someone, then you can relax it a lot more. And that's what Jeff was also talking about. But in terms of the workflow technology as well, a high-risk PEP, based on the condition that this person is high risk, you can also implement a different workflow with shorter turnaround times, a lot less flexibility in dealing with the issue than you would have with a low-risk PEP. So you can implement different workflows based on different conditions with different turnaround times, and you can decide at what point do you engage compliance. Does it go back to the branch first before it comes to you? Those are some of the things that you should be able to do. The last thing that we should be able to talk about is this. How well is all of this working? So this is an example of a dashboard that we implement for customers. And if you look at this one, it says, you know, this is how many hits we're getting in terms of screening, and you can see the trend of hits that we're getting. And this is all talking about how many new hits we're getting, and then you can see the false positive rates below it. So you can see what is going on, and you should be able to say, hey, maybe we need to take another look at what's going on with the false positive parts in terms of, is it learning, is it getting better in terms of the matching algorithm. But at a high level, these are all the things that you should be able to do that will help you to be a lot more efficient in terms of what you're doing and kind of get the best results without jeopardizing or risking the organization in terms of exposure to fines or sanctions.